In this video, we're going to look at a bull flag that is targeting $136,000 per Bitcoin here in the near term. We're also going to touch on how global M2 is on the rise, specifically through August, and how liquidity could have some headwinds once we reach August and September. And we're also going to evaluate the current cycle that we are in. Are we going to have a blow off top in the coming few months, or could this be an extended cycle and have 4-year cycles fundamentally changed? I'll give my opinions on that. And to finish it off, we're going to look at the bull flag that I think is targeting $136,000 per coin. But to start this video, I'm going to shout out my friend Bitcoin Beelzebub. He has a great macro liquidity newsletter, and he has been talking about this idea of the TGA, the Treasury General Account. This is basically the government's checking account, how they're going to need to issue a lot more T-bills with a lower number of longer duration bonds to fund and refill basically the government's checking account so that they can continue to fund operations. And then this happens in cycles. And he believes that at the tail end of August going into September, we're going to have some liquidity headwinds as money is basically sucked out of the broader economy and into this government checking account. And obviously this is a small part of liquidity, but it is important to look at as well. So he writes here, the TGA is currently low, around $319 billion in late July, and they want it back to a safe level of $850 billion by the end of September. In simple terms, the government is planning to borrow a ton more money soon, up to $1 trillion for the summer quarter, to cover spending and rebuild its cash reserves. They'll do this mostly through short-term bills. This is Yellonomics. This is issuing at the shorter end of the curve with some tweaks and keep longer-term bonds steady. This might feel like a squeeze in August through November, acting as a headwind for markets, but things could ease by December as issuance slows and spending injects money back into the broader economy, especially if the Treasury opts for a dovish approach. He's calling for liquidity to kind of shrink back down a little bit if we think about just money in the broader economy that can flow into markets, it can flow into goods and services. And as the government is going to have to pull probably just south of $1 trillion, they're going to have to basically suck it out of the economy when they issue these T-bills. You have market participants that use their cash reserves to then purchase those T-bills. And so the money is transferred from private market into basically the government's pockets for the short term before that goes back into the broader economy through government spending programs. However, before this happens, if I can go all the way down to the bottom, you guys should subscribe. This is an incredible newsletter. He did say that he bought MSTR as Bitcoin exposure at $406 yesterday at the Friday close because he thinks that Bitcoin still has more run in it over the next few weeks until macro headwinds hit. So we're not quite yet at these macro headwinds. As we've seen basically throughout the entire year, the dollar index has fallen. We've seen a massive repricing in all markets, in equity markets, in real estate, in Bitcoin, and this is probably going to continue for the near future, although we could see some bounces that coincide with a filling of the TGA. And this has led to an increase in global M2, what people commonly refer to as liquidity. They're not quite the same, but this is basically a poor man's indicator for where liquidity is headed. And this is set on a 10-week lag for Bitcoin. We can see that this has been tracking really well. It's not a 100% correlation. It's not 1.0, but it does give a general predictor of where Bitcoin could head in the future. Now, there have been periods of dislocation in the past when there are extenuating circumstances for Bitcoin, exogenous shocks to the system. However, over the last 2 years, we've seen it follow global M2 very, very closely. And I don't think that we're necessarily headed all the way up to 180. This is just an alignment problem at the end of the day. But I do think that we could see something like 136, 140,000 before the end of August. For the next month or so, I'm expecting Bitcoin to continue its move up. I don't think that it would just go from 113,000 to 123,000. That's not really the type of move that we're expecting to see at this stage of the bull market with Bitcoin. The next thing I want to talk about is basically a wave 5 extension. In Bitcoin, or basically in any market, you have what are called the Elliott waves. Now, some people love these, some people don't. But if we zoom out, if we're on the weekly chart right now, for the cycle so far, we've seen a very steady macro Elliott wave impulse in this wave function that brought us all the way up to $109,000 the day of the inauguration. However, since then, a few things could be happening. You had a lot of people on Twitter that were calling for this to be the top, which from an Elliott wave perspective was valid. We had a basic ABC correction into the tariff low at around $74,000. But the question is, what is going on here and what can we expect as we continue to move in this market? And what we could see is something called a wave 5 extension. This is when you have 5 more macro waves that are inside this already macro 5. So if we look at the low that we had, this was the yen carry trade meltdown we saw to 49,000. We could basically see a continued extended 5 wave. So this impulse into the inauguration at 109,000 was wave 1. 2 was the pullback with this ABC correction. I'm not an Elliott wave savant. If you have a correction to these waves, please let me know in the comment section below. We are probably in the middle of a wave 3 extension before potentially a wave 4 pullback or correction here in September, maybe early October. And if this is a true extended wave 5, and by the way, these are not drawn to scale, these are an idea of how the chart could look. This 5th wave would bring us to a blow off top. Now, that's not necessarily a great thing for the long-term health of Bitcoin. If we have a parabola that is going to the upside, we're going to fail and break down and crash to the downside to some extent, depending on how overheated and how high Bitcoin goes. And so this is actually not what I'm hoping for. I'm hoping that we have a more steady kind of continued leg up. Maybe the 4-year cycles are dead, with Bitcoin becoming a much more mature global asset in financial markets, with a much more mature futures and options market, with much more mature institutional players like Bitcoin treasury companies, like institutions coming in with the ETFs. I think we could see a break of this traditional 4-year cycle. I mean, we really only have 3 data points so far, but if we were to see a parabola over the next basically 5 months, I think we could see something like this, with a peak in the high 100,000s to anywhere between 200 and 500K. That is not my base case, but I do, the chart is still supporting that kind of an outcome if these 4-year cycles are continuing and we do have a peak into the end of this year. One thing that is important to keep in mind is that if we do not experience this massive impulse with a wave 3 and a wave 5 that could bring us to a blow off top, and we just continue to chop sideways and do an increase, and then chop sideways and correct, do an increase, and just kind of repeat this pattern that Bitcoin has been doing, we're having mini cycles. You don't necessarily need to have a blow off top to finish it. If this continues, we could have maybe a continuation through August. We have a correction for a few months this fall as we chop sideways, and maybe early next year we continue higher and then kind of go down. Joe Carlos already says that bull markets don't die of old age, right? There are very specific conditions that lead to bull market tops or blow off tops or bubbles, which by the way is the topic for the newsletter this week. If you want to learn about what actually kills bull markets, then make sure you subscribe to the Strategic UTXO, link in the description below. But as long as we don't see the massive elements that lead to blow off tops, that lead to bubbles, we could see very strong sustained growth to the upside. Now that means that we're not going to 200K by the end of the year, that we may not even reach 200K next year. But if we continue this pattern and the broader markets stay healthy and bullish and liquidity is increasing and the economy is strong, unemployment is down, maybe we see rates come down half a point to 100 basis points, something like that, you could have a cycle scenario where by the time President Trump leaves office, we're at $300,000 or $400,000 per coin. And a lot of people have sold along the way thinking that a year-long 12-month bear market was coming, and it never does. And so unless we see like this parabola forming on the log chart specifically, I don't think it's necessarily going to be wise to sell Bitcoin and hold cash, unless you're obviously doing it for lifestyle purposes. Okay, let's zoom in on the daily chart. If we look back to the April lows that we had on Liberation Day, where we were liberated from our gains, Bitcoin dipped all the way down to 74,000, and we had a very structured move with impulses and corrections through the end of May, where we put in 112,000, and Bitcoin formed a bull flag, where basically we chopped sideways for 2 months. And with a breakout from the low at 98,000, a very conservative target is for 136K. Basically by the middle or end of August, depending on how this is drawn. This is basically pulled right from that impulse. And by the way, I did not do this on the log chart, which is what I have on right now. I did this on the linear chart. So if you draw this on log, this can go much higher into the 160 pluses, but that's not my base case. My base case is that we could continue into the 130s and 140s and then have a cool off period early fall. Seasonality has not really been affecting Bitcoin so far and other markets. I think it's because we had such a crazy spring, such a chop solidation spring and early summer, where now Bitcoin and other risk markets are ready to move. And so in the near term, before we see some of these liquidity headwinds that my friend Bitcoin Beelzebub was talking about with the TGA refill, I think you could have a buy the rumor, sell the news happening with rate cuts as well that the market is expecting in September. So you could have a potential, if we're going to have this blow off top, you'll have a wave 3 peak somewhere in August or September before you get our rate cuts. It will be kind of a sell the news event. Maybe we'll have some negative economic data that will bring us down before potentially a wave 5 blow off top. Or if we're not going to have that typical extended wave 5 blow off top bubble kind of price action, you could see a more moderate increase in Bitcoin followed by a similar pattern, and we'll kind of maybe continue higher slowly through the end of the year and then into 2026 as Bitcoin continues its very stable and measured increase to the upside. That's all for today. Thank you so much for watching, and I will see you in the next video.